X at the electric automaker. Tesla planning to idle production for those models through January 11th, according to an email for the plans obtained by CNBC. It's an interesting production pause, considering those models are not exactly the most popular there, only about 11% in terms of deliveries in the latest quarter. And a new report out from Electric saying part of the reason could be that the automaker has already met its goals for Model S and X deliveries for the fourth quarter. Interesting there. Could be driving the price action we're seeing here today. For more on that, I want to bring on our next guest. That would be Gordon Johnson, GLJ Research CEO and founder here with us. Gordon, appreciate you taking the time here to chat. I mean, it's obvious that Tesla's been focusing more on the cheaper Model 3 here. That's the main driver, of course, the main shift, kind of ahead of the incredible rally we've seen here this year. But what do you make of that, and how important is it for Tesla and Elon Musk when we talk about the Model S and X?
Well, I think it's baffling some people because just a few days ago, Elon Musk put out an internal email that was leaked to the public that said they were effectively production constrained. They needed to significantly increase production. And then a few days later, we find out they're shutting down production for the S and X for 18 days. Look, I think it's one of two things. One being, A, being rather demand is a problem, or B, being rather they need to retool or refurbish the model to make it more attractive. Either way, it's a demand problem. It kind of stands in contrast to what Elon Musk said just a few days ago, i.e. that they were production constrained.
So which do you think it is?
I think it's probably a combination of both. We know those models haven't sold well, so I think that's a problem for them. But I think there's other issues that we can get into. A couple of actions Tesla has taken recently that suggest demand is really a problem.
What might those be, though? Because when we're talking about a stock that's up so much there this year, people have been talking about the idea that demand has been strong, considering, you know, the delivery targets being shattered quarter after quarter for Elon Musk and co. I mean, it seems like things are moving in the right direction, but I know there are other critics out there that point to increasing competition, not just from the traditional automakers, but a lot of other ones out there, mainly NIO in China, maybe eating into the China growth story that's propelled this stock so much this year.
Right. So I think what's important is, look, we're the biggest bears on the street, and our estimate for 4Q deliveries is 180,000. The street consensus is below us. I think everybody's below us. So I think the street overall is sandbagging their numbers, which allows Tesla to continue to beat. But think about this. Just over the weekend, we found out that Tesla is offering free supercharging for a full year if you buy a car made out of Fremont before the end of the year. That suggests they're trying to pull in demand. We found out last week they cut the price on their German inventory cars by 1,090 euro. That's a big price cut. They're trying to push through demand. And we know that Elon Musk, has cut the production, etc. And if you looked at China, right? So in China, people got excited about in October, the sales were about 12,000. In November, it looks like they jumped to about 21.5 thousand. We believe what enabled that was an 8% price cut at the beginning of October, which we really saw in November. But the problem is that price cut was enabled by them changing technology, LFP batteries, which are now being widely reported in China to only get 50% of the range in the winter and only get 50% of the range reported today in Europe in the winter in cold weather. So the problem is, potentially for Tesla, is are they going to be able to continue to sell that amount of cars in China now that people are seeing that the range is only half of what's promised? And we also think there's issues with respect to the coming S&P inclusion.
And I mean, I was going to say that all of this you're pointing out here, as we looked at that inclusion on Friday, certainly the announcement was a big catalyst for the stock. You say that you're very bearish on it right now. We're looking at Tesla's trading at $635 a share, roughly. Where do you think fair value is?
I think fair value for Tesla is probably around 60 to 80 bucks. We think it's going to head there. We think it happens next year.
60 to 80 bucks.
Be a problem. Want to talk? No, go ahead. I'm sorry.
Did you say 60 to 80 bucks?
Correct.
Walk me through your thesis.
Right. The thesis is simple. Tesla's currently trading at about 200 times earnings, whereas on average, automakers trade around 6 times earnings. Tesla is seen as a technology company, but they don't have the technology that people think they have with respect to there's no there with respect to the batteries. And with respect to S&P inclusion, I think this is important. Since the S&P announced they were going to delay the inclusion about a month and a half ago, or they were going to include them about a month and a half ago, there's been about 1 billion shares traded. And prior to that, when they reported a profit in 2Q, there was 1 billion shares traded around that time. However, based on the S&P's own estimate, there's about 130 million shares that need to be purchased by indexed fund holders. So the point is, on that inclusion, you're going to potentially have a lot of shares that have been front run on this inclusion that are going to have to be sold. So you could have a significant sell-off on Friday or before Friday as some of that money that went into Tesla stock looking for inclusions comes off. Now, to your question of what our thesis is, listen, next year, right, Tesla has only been profitable 4 quarters out of their entire existence as a company since 2016, excluding credit revenues. These are government-funded revenues that Tesla gets. They weren't even profitable last quarter. Next quarter, for the most part, we believe those credit revenues significantly fall and in 2022 go away. The reason is because every automaker is now selling their own EVs. So if Tesla goes back into loss-making status, and when you add to that the fact that even the big jump in their Chinese revenues, their market share in China only went from 8% to 12.5%, October to November. The prior high this year was 25%. So they're losing market share in China, and their EU market share has fallen from about 33% in Q4 to around just above 10% right now. So in the markets where you have competition, they're losing share. So as their growth slows, as their earnings turn back negative next year, we think there's going to be a significant sell-off in the shares. Institutional ownership right now, 41% roughly, nearly an all-time low. As people start to sell those shares and the retail money, which is driving the stock, starts to sell, we think there's going to be a swift downdrift in the stock. You've seen this before. I know it sounds crazy. Look at Tilray. Look at Sun Edison. Look at Suntech. Look at some of these stocks where they went from 5 to 300 back to 5. They went from 2 to 300 back to 0. It does happen, and we think Tesla is a prime candidate.
What up, everyone? It's your boy Dio, and this is Funkla Investment. So, guys, let me walk you through the technical analysis of Tesla today. So, guys, this is where we stopped last Friday. As you guys can see, Tesla stock has finally broken out of this pennant that I drew on Friday. I shared this video on Sunday, and I believe the resistance was around this. Tesla closed around this level on Friday, $610 and today it's open with a cap up at $618 level, and right now the stock is trading around $640. So as you guys can see, it broke successfully out of this resistance, and I believe we are headed towards $653 to kind of create something like a double top, which I believe shouldn't be easy for Tesla to break out. But as you guys know, next week Monday, I mean December 21st, is the S&P 500 inclusion, so maybe we are still going to see a lot of volatility this week before the end of the week. As the video I shared earlier, as you guys can see, Gordon Johnson is still bearish Tesla, and he believes the price is still headed towards $60. So I don't know how that is going to happen, and I don't know how Tesla is going to crash right from this level of almost $650 to $60 level. So guys, right now that is what is happening technically. As promised, I'll be sharing video every closing every day with you guys technically, and any important news that is going on. So right now I believe Gordon Johnson news is still the top news right now with his bearish view. So this stock is up 4.92% as at now, trading around $639. This is 4 hours candlestick, and today when the stock opened, I mean, it went down a little bit to retest the resistance after turning it into a support. Then it continued to rally up. As you guys can see, it opened around this $619 level. Then it went back down. Maybe I'm going to switch over to the 30-minute candlestick so that you can. So this is it. It went right up. Let's take a look at the 15 minutes. Yeah, it opened at this $619 level, went straight up to $628, then went back down to this around $610, you know, just to retest the support after turning the resistance into support. And since then the stock has just been going up, and right now it's trading around this $640 39.90 US dollars, up almost 5% today. We have like 4 trading days left before the S&P 500 inclusion, and I believe we're still going to see a lot of actions in this stock this week. So guys, if you're new on this channel, please destroy the like button and subscribe. I remain your boy Dio. This is Frontline Investment. Have a wonderful day, guys.